Newsfirst, Newsline with Faraz Shauketaly.
And a jolly good morning to you. This is Newsline Live. We're broadcasting from the Newsfirst studios in Dawson Street in Colombo. And this morning, Newsline Live has done something slightly different. We've met up at a local hotel with a investor of some repute, Dr. Mark Mobius, who's made a name for himself over the last 30 plus years in identifying, researching and investing in emerging markets. We met up with him recently, just a few days ago in Colombo, and we got about 15 minutes of interview with him. We are also joined this morning, after listening to Dr. Mark Mobius, we're joined by Mr. Malik Cader, former Director General at the Securities Exchange Commission of Sri Lanka and a former Senior Advisor to the Ministry of Finance under Dr. P.B. Jayasundara. Now then, we hope to first listen to Dr. Mark Mobius, and thereafter we will engage in a discussion with Mr. Malik Cader as to the implications of what Dr. Mark Mobius has been saying. In the meantime, of course, we can have your questions by SMS only, please, to 0772 300 305. So the messages by SMS only, please, to 0772 300 305. On that note, let's start. Let's listen to Dr. Mark Mobius. He is a investor renowned for his investments in emerging markets. He made a spectacular return to Sri Lanka very recently after having been in Sri Lanka pre-2015. Now, here we go. Let's listen to Dr. Mark Mobius with Newsline. Dr. Mark Mobius, welcome to Sri Lanka. Perhaps it's welcome back to Sri Lanka. Why is it that you're back in Sri Lanka? What's changed?
There's been a change in government, and it looks like there will be a return to higher growth and more investment. So that really is very attractive to us.
Dr. Mobius, previously you were already in Sri Lanka, but then you left. Why did you leave? Was it lack of business here? Well, the question is, why did you leave?
When you see a slowdown in growth, then you tend to think, well, maybe we better go elsewhere for a while until things change. And we've seen over the last 4 years, not much was happening. Now with this change, we can see a growth path for Sri Lanka again.
Drawing on your expertise of 30 plus years in emerging markets, what would your expert opinion be, or advice be, to the new Sri Lankan government?
First thing is make it easy. In other words, cut down on all the procedures that are required to bring money in and take money out, number one. Make it easier to travel. In other words, make visa-free travel for, let's say, Europeans, Americans, Japanese, Chinese, the people, the big investors, people from the Middle East.
Right.
That's another thing. And the other thing is to clarify the tax situation.
Right.
In other words, of course, there should be a tax regime which is competitive with countries in the region and around the world, particularly in the region. Compare yourself to Singapore, Thailand, India, all these countries, and say, okay, what kind of tax regime do we need to attract investment?
Everybody in Sri Lanka is concerned about the debt. And they say it's all this debt, and Sri Lanka is drowning in debt. What do you have to say about the debt?
I think there's an opportunity, a great opportunity to restructure. As you know, in Europe now they're running in euro negative rates. Right. So there's no reason why you can't go in and raise sovereign funds with a very low interest rate. So this is a great opportunity for Sri Lanka to move in that direction. But that means selling Sri Lanka to investors.
Right.
So one of the things they've got to do is get to London, get to New York, and explain the changes that are taking place here.
Dr. Mobius, would you find, or would you say that Sri Lanka's debt position is an attractive proposition when it comes to restructuring the debt as you advise?
Yes, if the restructuring of the tax regime and the economy in general goes ahead the way we're seeing it for the new regime, new government, then it will be attractive. It will be attractive to invest and to buy sovereign bonds from Sri Lanka.
And over what period of time should this restructuring be taken for? Is it 10 years, 20 years? What's the time period that they ought to be looking at?
It's very important to take a long-term commitments, talking 20 years, 30 years, 50, even 50 years.
Right.
Because right now, investors around the world are really desperate for yield, and they're willing to commit long-term to some debt commitments with good rates of interest. For them, good will be 2 or 3%, because negative rates in Europe are just very, very low.
Does Sri Lanka offer, in your view, does it offer enough opportunity for foreign investment?
The potential is there. There's no question about that. There are, of course, two sides of it. There the fixed income, and of course the bond market. One of the things the government has got to do is develop the domestic bond market, because that can be attractive to foreign investors as well. You know, Sri Lankan bonds in the domestic market could be something that they want to encourage. And then on the equity side, they've got to increase the size and liquidity of the market to make it attractive. Because, you know, for the big investors, putting 200 million, 300 million, 400 million in the country is nothing. So you've got to have enough to buy. There's got enough liquidity.
And Dr. Mobius, how much value do you place, as an investor, how much value do you place on governance values?
Very, very big. Governance is very, very important. And this is true not only in Sri Lanka, but globally. In fact, our whole investment thesis is based on governance, improving governance. Now, it doesn't mean you have to be perfect, but it means that you have to be receptive to improving governance. So what we do is we try to target companies that are receptive to listening to us and helping us to help them improve their share price.
In Sri Lanka, in the last, say, 4.5 years, we've had a rather challenging period in terms of bonds and the bond market. We've lost a governor of the central bank, and so how much of negativity will impact on Sri Lanka's quest to restructure and so on?
Of course, people will always look at that and say, oh, the history. But think about Argentina. How many times have they defaulted and yet come back? So Sri Lanka is in a much better position than countries. But what I'm trying to point out is that memories are very short. You know, when people need yield, they will be willing to forget the past and say, good, I'm going to go into this because I can see an attractive yield.
Dr. Mobius, this government, this new government, has somewhat of a challenging past. And our new president, Gotabaya Rajapaksa, says that, tells us, the media, not to focus so much on the past, but to look to the future. What do you have to say about that, Dr. Mobius?
Well, I think the government's got to recognize there are always going to be mistakes made. Any great leader will recognize that he's made mistakes. And you can go to the history of all the great leaders of the world. They've always been willing to say, look, we've made mistakes and we're going to change, we're going to improve. So you can't have a future without a past, and you can't have planning for the future without looking at the past. So I would recommend that the government recognize if there have been any errors, recognize them, and then say, let's move on together and make a better future for the country.
Sri Lanka appears to be stuck in this classic $4,000 per capita GDP. It's in that sort of abyss. How do you advise them to get out of it?
Well, the only way to do that is to promote economic growth in the country, because you know, a rising tide lifts all boats. Now there'll be some people that say, wait a minute, this guy's earning more than I am, it's not fair. You're going to get that any case. But if you can get that tide rising, in other words, the GDP of the country rising, everybody should benefit, provided that the the tax regime is in place to ensure that everyone is paying their fair share of taxes.
What do you have to say to those, Dr. Mobius, who say that Sri Lanka is quite literally drowning in debt? What do you have to say about that?
Well, you have to look at the U.S. The U.S. is one of the most advanced and successful economies in the world, and their debt is growing and growing and growing. They have tremendous debts.
So
but
you have
people,
to live with it?
Yeah, you have to live with it. No, you have, but the most important thing is that in the case of the U.S., they're not in a high growth potential. In other words, 3% growth in America is very, very good. But Sri Lanka can be growing at 8 or 9%. And that requires debt. It requires investment. When we talk about debt, what is it? Debt is a means to have investment. So, of course, we prefer more equity, which is why I'm encouraging a bigger stock exchange here so that you can raise more equity. But you've got to have a combination of debt and equity.
What do you have to counsel our government in terms of increasing the size of our equity market and even the debt market?
Well, I think the most important thing is to bring these big state-owned enterprises to the market while the government still controls and continues to grow. And you can look at the example of China. Look at the big listed companies in China. Chinese aluminum, Chinese insurance, the big banks. They're all government controlled, majority controlled by the government. But they're listed.
Okay.
And they've issued a small percent of their shares to the public, both the local public and the foreign public. So I think Sri Lanka has got to take that example. The advantage is twofold. One, you're going to raise an awful lot of money for the government, for their budget. Two, you're going to have better performing companies because the exposure of listing means that the companies will be more transparent. And people will look at them and say, okay, here's where you can make an improvement, here's where you can make changes, and these companies will begin to earn more money for the government because the government's still a shareholder, and they're taxpayers. So it's really good for all sides.
Which areas of Sri Lanka's economy have you identified as being of special interest?
Yes, of course, real estate is one, which, it's even many people say, oh, the real estate prices have gone up too much, so forth and so on. But this is normal. This is, the urbanization of Colombo is going to continue. Most of the population is not living in cities, and they're going to be moving to the cities, not only Colombo, but other areas. So I think real estate would be very interesting. The other thing that interests me is the software industry, the service industry, call centers. I think Sri Lanka is a nice, attractive place for software people to live and work. And that could be a very interesting area.
There's this saying that government shouldn't be in business, that government has no business being in business. What do you say to that?
Well, I think the most important thing is to bring these big state-owned enterprises to the market while the government still controls and continues to grow. And you can look at the example of China. Look at the big listed companies in China. Chinese aluminum, Chinese insurance, the big banks. They're all government controlled, majority controlled by the government. But they're listed. And they've issued a small percent of their shares to the public, both the local public and the foreign public. So I think Sri Lanka has got to take that example. The advantage is twofold. One, you're going to raise an awful lot of money for the government, for their budget. Two, you're going to have better performing companies because the exposure of listing means that the companies will be more transparent. And people will look at them and say, okay, here's where you can make an improvement, here's where you can make changes, and these companies will begin to earn more money for the government because the government's still a shareholder, and they're taxpayers. So it's really good for all sides.
Dr. Mark Mobius, we call ourselves the People's Channel. So I think it'd be appropriate for me to say, on behalf of the people, and certainly on behalf of our group, the Maharaja Group, and this network, to say thank you for coming back to Sri Lanka and for your time.
Well, thank you very much.
And I promise you that this will be the last question. How important is India's success to Sri Lanka?
It's very important. If India grows at a faster rate, India investments will come into Sri Lanka, because as the Indians become richer and richer, they will seek other areas for growth. So Sri Lanka will be in a very, very good position. And it's interesting to note that maybe 20 years ago, the Chinese wouldn't think of putting money into Sri Lanka. Now the Chinese are here in force. Why? Because they're richer. They've got more money. And the same thing will be true of India.
And that was Dr. Mark Mobius, the well-known investor in emerging markets, who was here in Sri Lanka. And we're joined, the Newsline is joined by Mr. Malik Cader, formerly from the SEC and the Ministry of Finance. What did you find most interesting, Malik Cader, about what Dr. Mobius said?
Well, for us, there are lots of positives for us to take from what Dr. Mark Mobius just mentioned. One of the things is that he categorically stated that we need to grow the size of the market, the length and breadth of the market. And one of the things we can do to grow the market is by bringing the SOEs into the Colombo Stock Exchange, or get them listed. Now, listing SOEs, government-owned organizations, is perhaps not a very complimentary thing, right, from a public perspective, because many of them would think that there is some kind of a move for privatization. Some of the examples given by Dr. Mark Mobius in China is a very good example for us to take from. Government, for instance, our market is very small.
Indeed.
For us to attract foreigners to come into this market, we have to grow this market. We have to initially at least grow the market, make it double the size. We have to make it double the size. So bringing some of these SOEs to the market, you're going to double the size, rather than bringing just 100 million companies into the market. It's
important as they are.
It is, because we look at the two state banks, look at the insurance corporation, look at some of the hotels that are owned by the government. We bring them in. We are easily looking at doubling the size of the market. Looking at the regulation, offering 10 to 15% of those shares to the employees and the public is not going to hurt anyone. As quite rightly mentioned by him, he also indicated there will be also value creation.
Indeed.
There is value creation. For instance, some of these banks, some of the insurance corporations, we have not got the values properly realized.
But can I just stop you just for a minute while you're saying this? It's all well and good if you have SOEs, state-owned enterprises listed, a small percentage of the shares listed on the Colombo Stock Exchange. Well, yes, that's fine, but don't you think that in this culture of Sri Lanka living as we do, in this culture of political patronage and impunity and little respect for the rules, that these state-owned enterprises, as it is, they are populated with cronies, lackeys, if you like, of whichever government is in power, and therefore they tend to quite often rob left, right, and centre. They keep the Auditor General rather busy. So don't you think that it will be a little bit of little use if it was to be listed on the stock market? Or
one of the things, by listing a SOE in the stock market, you're making it much more transparent than it is, right? It is, for us, you're lifting the veil. We don't know what's happening, right, at the behind the scene. But when you basically list a company in the stock exchange, you are having more, it becomes more transparent.
Right.
It becomes more transparent. You're talking about cronies and all that kind of stuff. You see, when it's listed, when people see what's happening, right, all those things will reduce. Look at what happened in Malaysia in the late 90s. I think Prime Minister Mahathir Mohamad,
Yeah.
he took the bull by the horn,
Yeah.
right? And particularly where the capital markets were concerned.
Yeah.
He did a lot of development. So I trust that this regime, right, having a very strong leader, right, corruption can be eradicated.
But Dr. Mobius makes the point that by bringing these into the market, these SOEs, listing even a small portion of that onto the market, that it will foster and encourage transparency and therefore make these companies better. People will be able to say, look, that's good, but this is bad. And so very openly, a slow process perhaps. But do you think that on balance it will be something good for the country?
It will be extremely good, but it will be, as quite rightly indicated by you between the lines, it's a difficult thing.
Yeah.
Right. So that's
It's
why
difficult because
because
this government, for example, has an ideological stance where it is in effect, we shall not sell this family silver. So we don't want to sell the family silver.
It is not selling the family silver. So, for instance, one could say that it's a selling of the family silver. You are actually enhancing the value of the family silver.
Right.
Currently, if you're having 100 rupees,
Yeah.
you're making it 300 to 400 rupees overnight
Right.
by listing. So you're enhancing the value
Right.
of your family silver. You're getting a price quote on your product. Right now, we don't have a price quote on the product, which also means that the market capitalization of the Colombo Stock Exchange will go up. It will help the GDP as well in that
Yeah.
sense, right? So there are loads of good things that will happen to the country and the market. And for us, one other thing, quite rightly he mentioned, someone coming with 200,000, 200 million US dollars to Sri Lanka
Yeah.
to invest. What can he buy? You go to the market, you ask a broker, I bought 200 million, right? Do I have stocks to buy?
Indeed, but
Liquidity.
But Malik, Cader, I have to take you back to the time when you were at the SEC, the regulator, and you put in all sorts of measures there, and finally you were sort of known as a buckle-tight regulator.
Quite right.
So how on earth are we going to increase the size of the market, even with SOEs coming in and so on? Because the minute the stocks start moving, you're a bit of a party pooper. Some say that you are a bit of a party pooper with your buckle-tight regulations. And so then the growth is stunted. What do you have to say about that?
For us, it's not the real growth that was stunted.
Okay.
Right? The real growth was still there. It was the unreal growth, right, which was not there, which we actually brought to size. I think I'm still happy. I think with the former chairperson, Mrs. Shauketaly, we took some very strong measures. We in fact took the bull by the horn, they say. Today, credit is wiped out from the market.
Indeed.
Right? In good old days, right, basically this was a place where people will come and basically ride on credit. Today, on the third day, the broker is after investor to see that the money is put. So we bought credit regulation. We brought a lot of sanity into this market, right? Manipulation was stopped. And today I'm happy to say some of those things we took, the market learnt a lesson, and it's continuing in that spirit.
How possible is the return of pumping and dumping, for example, in Colombo stock market?
It will be a bit difficult right now because investors are also mature. And there are people who know about pumping and dumping, and they are not going to simply ride the tide, right? Because the regulation is also pretty stringent. There are stock watchers at the Colombo Stock Exchange, stock watchers at the SEC, and also the public. They're watching what's happening. So, with social media activity and all that kind of stuff, there is an element of the market being better regulated right now.
Okay. So, how does that? Do you think it's a sellable proposition for the government to people say, "Oh my God, they're selling the family silver"?
It is not, for us, it is a dirty word actually, this privatization of bringing the companies to the Colombo Stock Exchange.
Yeah.
It has been, don't you know, used as a very bad word. That should not be talking about privatization. I think we need to keep the public, keep all these stakeholders informed what exactly is happening.
There was a hard...
And in fact, this has to be done, right? It has a top-down approach. It has to come from the top to take a stance of creating value, increasing the value of our family silver, bringing in, you see, a lot of technology, right? Bringing in more transparency.
So when you say that it has to start from the top, we need the government to appoint people to these positions where they can actually drive.
Right, exactly. We need a lot of movers and we need a lot of movers and shakers.
Right.
The last 4.5 years, right, we didn't have any movers or we didn't have any shakers. It was very stagnant. There was nothing big.
There were suggestions of making some things like into a sort of a Temasek model kind of thing.
Yeah, so those are good. We can learn from some of those models. We can learn from some of those models. We are putting all these organizations into a one unit and list them. So those are things which basically you need to have a little bit of research and learn from other countries and see how it has worked and see the best possible scenario for Sri Lanka.
And Dr. Mobius was talking about restructuring our debt or looking at the debt slightly differently. We'll come to that in a moment after the break. We'll discuss the possibilities of Sri Lanka being able to restructure the debt, taking advantage of low interest rates now prevalent in the West. So don't go away. This is, after all, Newsline live now, and we'll be back soon after this very short break.
News First, Newsline with Faraz Shauketaly.
And a very warm welcome back to Newsline Live, where in the first half we heard our interview with Dr. Mark Mobius. Dr. Mark Mobius, of course, very well known as from the Templeton fame, and he retired after 30 plus years there, and then went on to form Mobius Capital Partners, and it is in that capacity that he returned to Sri Lanka. And we joined, of course, by Mr. Malik Cader, formerly of the SEC, sometimes referred to during that period as a buckle-tight regulator. And we've been asking Mr. Cader how we're going to have a robust stock exchange. And I suppose this will also be of interest to all those who indulged in the pumping and dumping scandal. And we did a famous series called The Return of the Barbarians. How do you balance the two? The need to broaden the market, bring in the SOEs, listing them, encouraging better transparency, better accountability, so that it's a nice way of naming and shaming people, because they're listed, they have much more procedures to handle. But how do you do that along with the desire to pump and dump stocks?
For us, in any market, you get, don't you know, the type of individuals you're referring to, manipulating market, trading on inside information, all that kind of stuff is prevalent in all markets, even in the US market or even the regional markets. So it is the regulation, it is how the regulator acts, how the regulator would go after these individuals is what is important. So the regulator also, for us, will have to play a very balanced role.
Right.
A very balanced role, right? As an intermediary, watching the market and see that the market also grows. Because in Sri Lanka, in developing countries, the regulator also has a mandate, a development mandate, which other countries, developed markets, don't have. So the regulator also has his mandate to see that the market is developed, because you need to have a market for them to regulate.
Right.
Right? So because of that, the regulator will have to be balanced. Will have to be balanced. But in the event there is some calamity, they will have to step in. They will have to step
Are we
in.
giving people like Vimal Veeramans and the Mervyn Silvers of this world, are we giving them sort of leeway to scream, shout, and agitate the trade unionists, for example, that that the government is indulging in, selling this family silver?
For us, for political reasons,
Yeah.
this is a very strong weapon. It's a weapon which is easy to sell, right? But looking at it from a very economic point of view,
Yeah.
you need to make them also understand the ultimate, the overall benefits the
Yeah.
country is going to get,
Indeed.
right? We are talking about the banks. You cannot sell more than, there is regulation.
I
But
met a banker.
you cannot sell more than 10% of shares.
Yeah.
There's no individual who can own more than 10% of shares.
Yes,
Or a
but
group,
there are
yes.
some exceptions, right?
There are exceptions
Yeah.
because of certain instances where the banks were going down,
Yeah.
right? Then the central bank permitted certain individuals to come and take over those banks,
Right.
and gave them, right, 5 to 10 year gap to reduce their holding to 10 to 15%. So that is there.
And
Those
then,
regulations are there.
But some individuals persisted to try and beat the system, and they had proxies to hold these shares. How did you, as a regulator, how did you manage to identify these and force them into selling?
You're referring to the banking sector?
Yes,
or
in the banking sector.
In general?
No, in the banking sector.
Yeah. For us,
I don't want to mention the names of these banks. We don't do that on our network unless there is compelling need.
Okay.
But I do recall instances where at least one bank had proxies holding, and these proxies were not entirely divorced from the ultimate owner.
Okay. So far as those are things, I mean, if there is credible information, you could go into an investigation, and then basically you could trace from where the funds have been derived, and you could look into that.
Yes.
For us, one other little thing which needs to be remembered is there is this acting in concert
Yeah. Indeed.
rule,
Yes.
which is quite different to the rule which is there in the stock market to the banking sector.
Right.
Right? So people might will always go with what is there in the SEC rules,
Yeah.
right? Acting in concert, that rule and the rule which applies in the banking sector are slightly different.
Indeed.
Yes.
I know President Gotabaya Rajapaksa said this before his election, and his thought process was, look, why so much questions about the past? Why don't you ask questions about the future? In that context, I'm asking you, Malik Cader, has Sri Lanka now got, 4.5 years ago, when the government changed, there was a lot of talk about 12 files or 13 files of the SEC, and in spite and despite Mr. Tilak Karunaratne's several assurances on our program, nothing really has come out of those things. And now there is a new act, I believe, that they've putting out. Is that enough? Can we now say, well, okay, look, leave that, let's go, let's move forward?
I think for us, you're spot on. The last 4.5 years, we basically done nothing. We looked at the past, right? Not that there's anything which was achieved. I fully agree with the current president to say that let's look at the future. Let's look at the future to see how best we could take capital markets to the next level.
Dr. Mark Mobius, of course, says that governance issues are of the highest importance. He cited the example of Argentina, and he said that they've defaulted and so on, and that memories are very short.
Short, yeah.
Sri Lanka, of course, has never defaulted on anything. So in that on that side of it, Sri Lanka scores high. But the governance, do you feel that we've got the right controls now in place, or does it need fine tuning?
I think for the moment, Faraz, the governance and the regulation we have are very good.
Yeah.
The new SEC Act, I think it has to go before the Parliament,
Yeah.
because Parliament was prorogued. So
Yes.
the bill has to be presented again. What is there is fairly sufficient, because the Act we have right
Yeah.
now, which is alive, is an Act which is there from 1987.
Right.
So you
What's the fundamental premise of the existing act? Is it that it's only a civil matter, or is it, what do you want? You want it to become a criminal matter? Or is it the other way around?
Currently what we have is only a criminal jurisdiction.
So where the test
Yes.
of the burden of proof is very high,
Very high.
because it is beyond reasonable
Reasonable
doubt.
doubt.
And if it's civil,
It's a balance of probability.
It's a balance
on
of
a balance of
probability.
probability.
Okay.
And then there are new instruments which have come into the market. All those instruments can get regulated with the new Act.
now when soon after President Gotabaya Rajapaksa was sort of sworn in as president, the market on the Monday morning, it was back to its old dancing, kind of. It boomed. And then recently, when we had the announcements about the VAT and so on, it was a real VAT run kind of thing. And we had, I think the market went up about 100 points.
You're quite right, yes.
Increased about 3 billion rupees.
Close to, yeah.
But thereafter, it couldn't sustain it. Why is that?
For us to talk about the market suddenly rising up after the election victory and after the VAT run you mentioned, or the mini budget,
Yeah.
markets move on sentiment. For us, retailers are there to move the market on sentiments. Right? They see an opportunity. They see companies will be doing well. But unfortunately, what happened in this whole scenario is, although the market moved up 3 billion rupees of turnover, 100 points gone up, after a couple of days, we saw the market getting back into its original position of, you see, indexes dropping 30, 40 points or even a little more than that. I gather there's a reason for that. Because the market was driven by retailers.
Right.
And that's not a bad thing, to get the retailers back into the market. They also have to come and make a little money. The counters were looking very good. But unfortunately, the funds didn't come into the market.
Now, yes, now,
Particularly the government funds
Yeah.
should have come into the market, and they should have taken positions, and they should have.
was there a bit of a reluctance because people were frightened that once again, like during the pumping and dumping days, that how could the public be sure that EPF funds, for example, wouldn't be, it is not only what happened in the post-bond scam period that this happened. It happened before as well, where EPF funds were invested in stocks, where you found the stocks price was artificially boosted for no apparent reason. It had beaten your regulations, your handbrakes weren't in place then, right? And your buckle tight regulations didn't kick in, so they weren't there, and you suddenly found shares going from 40 to 65 rupees, and then the EPF comes in, buys that share at that amount at 62, 65, and lo and behold, like magic, 2 weeks later, boom, it's down, it's back again at 40. The public took the hit, and the easy answer to that is to say, well, look, we didn't buy to sell short term, we held it to hold for the long term. And therefore, you're talking about unrealized losses, or on the other side, some people are talking about unrealized gains. How can we be sure that the EPF funds won't be squandered in this way?
You're right in saying so, Faraz. In fact, the EPF fund managers, or maybe any other government fund, pension fund managers or whoever, might not want to take a gamble
Yeah.
in situations like this, right? But I think that's a very wrong approach. If they looked at the proper fundamentals,
Yeah.
right, they should make a proper call, because if not, they're doing injustice to the fund. Now these are situations, right?
But what
which-
rules are there to, apart from just doing that,
No, for
to
us there
give them
are-
a slap and get them out in probably behind bars?
Okay, they should be able to justify their positions. Now those professional fund managers can do that and should do that.
What positions, Malik Cader, during the presidential inquiry into the bond scam, one of them said, one of the excuses is that the chief dealer of some state-owned enterprise didn't turn up because he had a poor stomach. On another day, he had a headache. Ah, poor you. But, you know, that was used as an excuse to not buy at the primary level and to go into the secondary market, where the rest is history. That guy had a headache. So you mean there was nobody else to go? Nobody else to do the transaction?
No, from what you say, Faraz, that's a bad egg. You must recognize that that's a bad egg. It for a while doesn't mean that all eggs are bad.
Right.
Right. So what I'm trying to say is, in a situation like this, retailers cannot simply command or drive markets. There is value to be realized. There has to be a balance between retail and the funds. Right? Funds have to come into the market at the right time and create and make opportunity for those funds. If not, the funds will simply go down every day. They can go into fixed deposits. That's not going to help them. They have to look at the fundamentals of the company, and they have to make a call.
Now, Dr. Mark Mobius, we'll just finish off now. Dr. Mark Mobius said that our officials need to travel to the major markets, to London, to New York, and to wherever else is ready money, and to restructure the debt, so that, because interest rates are right now low, and go for long-term debts, 20, 30, even 50 years, he said. Do you think it's a doable proposition?
I think for us now, looking at the world markets, I think we can even go to international markets and borrow at even less than LIBOR. As quite rightly he mentioned, some of the European markets are going at even minus,
Right.
or less than zero. Right, so this is we have borrowed very high. We have borrowed at about 6,
But
7,
that's
or
only
maybe
because
8.
those, at that time...
Yes. So if we can borrow now at maybe LIBOR or even less than that and restructure the debt, I'm sure if we can borrow about 10 to 15 billion for the moment, you need to look at the numbers. If the numbers
Well,
are
if you
looked at
bring the
properly-
interest rate, the exchange rate down by 50 rupees to the dollar, you'll wipe off 10 billion from the dollar value
that's
of
not
the debt.
that's not an easy task.
No, of course it's not. But I think that these senior advisors are travelling here, there and everywhere and trying to...
Right, well, if we can do that, that's fine, but not 50 rupees, but even a couple of rupees here and there.
Okay.
That's going to have an impact, not only on the exchange rate, but on the economy as well.
Good. Thank you very much. We've run out of time. Did you believe that's 45
5
minutes? It's wonderful, Malik Cader, having you here.
It's a pleasure
And
doing all this program.
thank you very much. And on Newsline Live, we've much enjoyed today's program. To take care, have a wonderful weekend, and a great weekend ahead of you. Safe and peaceful, tranquil, very Sri Lankan. Take care, and God bless.
Newsfirst, Newsline with